So it's another great time, guys. We meet for this session of financial reporting and analysis. We are going to do a question on cash flow statements, and this is a question which was tested in the last sitting. That is December 2022, question 5. So I would like to say that in our Zoom classes, we have been doing a lot of sessions over the week. So right now, financial reporting for the Zoom classes, the online one, we do them on Wednesday and Thursdays. That is 8 p.m. to 10 p.m. For the advanced financial reporting and analysis, it's done on Monday and Tuesdays, 8 p.m. to 10 p.m. So those sessions, we do more than what is shared in this platform. But at the same time, this platform is more beneficial for the guys who cannot be able to join. But there's no way you can't join my online classes because it's at a friendly cost. So anyway, to the agenda of today, we are doing a topic called cash flow statements. Remember, cash flow statements nowadays is under published. Is one of the published financial statements. Is one of the published financial statements. Statements. So remember that other than the cash flow statements, we have statement of profit and loss and the statement of financial position. Remember that again, in two previous sittings, like now in the August 2022 and the December 2022 sitting, in those two consecutive sittings, they tested cash flow statements. So it's another major topic to know. So let's go direct and do that question because it was a question of a certain company which was acquired. So I can open the question from my end, of which I know for you guys, you have the question. Or what you do is all about, in 1 minute, check. There's a link I will share under the comments. Make sure that you open that link. Make sure that you do what? You use that link to access the past papers for CPA. So once you open that, go to 2022. Once you open 2022, go direct to December. Then once you open the December, you will be able to see the question I'm talking about. So there's that link I have attached to there's that link I have attached under the comment. There's that link I have attached under the comment. So you can be able to use that to get the past paper. So in my case, I have the past paper, but on your scenario, use the link to access that past paper. Use the link to access the relevant past paper. So I would like to read the question very fast so that I can be able to do it. So I have said it's a question of financial reporting and analysis. So financial reporting and analysis. So financial reporting and analysis. So this is a CPA, intermediate level. Intermediate level. So this is a paper in the CPA intermediate level. So I've said December 2022, question 5. December 2022, question 5. So December 2022, question 5. So for that case, I would like to read that question, then I do it direct. So they were saying that the following draft financial statement was extracted from the financial records of Malam Limited, a public limited entity. So as at 30th April 2022, with comparative. So that is with comparative for the year ended 30th April 2021. So you are given a statement of financial position for the year ending 31st, that is not 31st, but 30th April 2022, 30th April 2021. Then you are given a statement of profit and loss for the 30th April 2022. Then there's additional information number 1, whereby they said that Malam Limited acquired some new plants during the year to 30th April 2022 at a cost of 1.8 million from a finance company. An arrangement was made as at the date of acquisition for the liability for the plant to be settled by Malam Limited, issuing at par a 10% loan note. So he had purchased a plant, then he's paying the plant through the issue of a 10% loan note to the finance company. So the value by which the loan note exceeded the liability for the plant was received from a finance company in cash. So the liability they issued exceeded the value of that plant. Remember, the value of the plant was 1.8 million. Then they said that they wanted to pay this by issue of a 10% loan note, which they issued, and it exceeded the liability itself. So of which they said that they received the balance from the finance company in cash. So number two, there was a motor vehicle which was disposed. You can see there's a cost given there, accumulated depreciation, and the proceeds they got from the disposal of the motor vehicle. Number three, it's all about depreciation of the plant and equipment, which is given at 5.4 million. Then there's an intangible asset which is amortized in note 4. The note 5, there's this aspect of bonus. There's this aspect of bonus issue they made. So as I start solving this question, what I would like to request is all about you share the link for the guys following. Make sure that you share the link to other students so that they can also benefit. So share the link to the other students so I can be able to share it. So let me share it at least. We have a good number in this live session. For us to have a good number, for the guys to join, I would like to share these. So just a minute. So I think that is fine. I've shared it already. To whoever who would like to join this live session. So we can be able to do it. So it's all about, it's called the question itself, that is the company under this, the company under this is all about called Malam Limited. So it's all about Malam Limited. It's all about Malam Limited. So Malam Limited. So the Malam Limited. So statement of cash flow. So we need to do cash flow. So statement of cash flow. So statement of cash flow. So that is for the year ended when? For the year ended. Our financial year was ending when? Our financial year was ending on 30th April 2021. 30th April 2021. So 30th April 2021. 30th April 2021. 30th April 2021. So here we have two columns. So remember that for cash flow, we start from operating activities. We start from the operating activities. So we start from the operating activities. We talk about operating activities. So the operating activities, that is where I'm supposed to start from. So from the operating activities, remember that we start from the profit. So remember that for the operating activities, we start from the aspect of profit before. So the profit before tax. Profit before tax. So after the profit before tax, then we adjust that profit. Adjust the profit. So profit before tax, then adjust the profit. So the profit before tax, according to this question, profit before tax, the profit before tax. So you can be able also to be giving me the answers maybe under the chart so that I know that you are following what I'm doing. So the profit before tax, it's all about given in the statement of profit and loss. So the profit before tax is 8190, 8190. Then now after this profit before tax, remember that for us to get the profit before tax, we have non-operating items, or we call them non-cash flow items, which have been adjusted here, non-cash flow items or non-operating items, which have been done what? Adjusted. They have been adjusted. These items, you find that they have been adjusted for us to get the profit before tax. And they were not supposed to be adjusted for us to arrive at this profit before tax. So we need to do what? To correct that. So we need to adjust this profit. We need to adjust this profit. So which are these items? So we have items like depreciation. We talk about items like depreciation. Other than depreciation, we talk about impairment, not impairment. Let's talk about amortization because now this is published. We cannot have the aspect of goodwill. Maybe if goodwill arises, again, you take into consideration. So we can talk about depreciation, amortization. We can have even the one I have mentioned, the impairment. Impairment is another item to adjust. Loss on disposal, loss on disposal. You can talk about loss on disposal. We can talk about gain on disposal, gain on disposal, gain on disposal. Or we talk about, they call it profit. It's a profit or a gain on disposal. Profit or a gain on disposal. So these are some of the items, plus others I would mention. These are some of the items you will find that we need to adjust back. We need to adjust against the profit before tax. Because like now, depreciation, amortization, impairment, loss on disposal. For us to arrive at the profit before tax, they are supposed to be deducted. So what we do, we add back. So these ones will be added back. Then for the gain you subtract because this is a profit. So profit, for us to arrive at 8190, you would find that if they were to record it, they were to add. So you subtract. But we are adjusting the profit before tax. Checking on the question, checking on our question, all of these items are provided. All of these items are provided in our question. All of these items are given. So like now, if we go to additional information, the additional information, something there, that is this question of mine is misbehaving. So if we go to additional information number 3, they said that depreciation charged on property, plant, and equipment during the year was 5.49 and was included in the cost of sales. So that depreciation of 5490, remember this one is in thousands. So this one is in thousands. So the 5490, that one we add back. Then amortization also is given in note 4, whereby they are saying that intangible assets were amortized during the year, and amortization charged to the profit or loss amounted to 540. So this is another 540, which was adjusted in order to arrive at this. So we add back. There's no impairment there. Then we check for the loss on disposal. So for the loss on disposal, it's all about checking if there is anything which was disposed. Checking if there is anything which was disposed. They got a loss. So in note 2, they made a profit, not a loss. When the company's motor vehicle with a cost of 2.6 and accumulated depreciation of 1.1 was disposed during the year for cash proceeds of 1.8, so the profit on disposal had been included in the other operating expenses. That one was already included in other operating expenses, and they are not supposed to be adjusted at that level because we have said those are non-operating items, they're non-cash flow components. So meaning that what I will do here, it's all about to do the disposal account. Disposal account. So I will talk about the cost, I will talk about accumulated depreciation and loss on disposal, not loss on disposal, sorry. I will talk about the proceeds, not loss, proceeds. So remember that according to that additional information number 2, the motor vehicle, the cost was 2630. 2630. Accumulated depreciation is all about 1165. 1165. Then cash proceeds was 1810. 1810. So meaning that they made a profit of, so there's a profit which was made here. So they made a profit of, so I can pick my calculator so that we know the profit which was made. So they made a profit of, so this is how the disposal account looks like. So this is a motor vehicle which was sold. So the cost of the motor vehicle is this one. So we debit this, we credit accumulated depreciation and proceeds. So 1165 plus 1810. So that is 2975. 2975. Yeah, we have 2975. So meaning that minus 2630, they made 345 profit. The profit they made is 345. So that is 345. That is the profit. That is the profit. So this one you deduct. So another thing we need to check if there is a loss. If there is a loss, that is another thing we need to check. If there is a loss on disposal. So there was no loss on disposal. There was no loss on disposal. So far what I have done is all about adjusting the first 5 items against the profit before tax. So when you are doing a cash flow question, so obvious, remember that it will be based on 3 activities. I have started with the first one, the operating. So under the operating, what you do, you start from the profit before tax. You adjust with the items which are non-operating, which were adjusted in order to arrive at this profit before tax. So, and they were not supposed to be adjusted. So right now, remember, they said right now depreciation was under cost of sales. It was included under cost of sales. So amortization was done what? Was included under what? They said in this question, amortization was charged to the profit and loss. So remember that it was in that income statement. It has been adjusted. That is what they said. And the profit, they said, it has been included in other operating expenses. So they were not supposed to be adjusted, these items, in order to arrive at the 8190. So that is why right now expenses which were deducted, we do what? We add back. So I have added depreciation and amortization. We don't have impairment and loss on disposal. Also those, if they were present, we could have added back. Then for the gain, remember that this is an income which has been adjusted under the, which has been included in other operating expenses. So this one is an income. So it was added. So we subtract to adjust this profit before tax. So other than these 5, because the 5 are the one we start with, other than the 5, we go and check the others from the income statement. Remember that under our income statement, for you to understand well, remember that an income statement starts with revenue. We raise the cost of sales. We raise the cost of sales. We add incomes. Raise what? We raise expenses. So we get the profit before tax. Looking at this income statement of ours, that is what has been done. So now we have this profit before tax. So under this, remember that first we have considered the 5. I have explained why I have added these 2 to this profit before tax. Then deducted the gain. So now, in these items, revenue, cost of sales, incomes may be the one which are there, and expenses. So we have still others which are there in the statement of profit and loss, which were supposed to be, which were not supposed to be adjusted, not they were, which were not supposed to be adjusted to arrive at this, but already they have been adjusted. So other than the one I will not adjust against the profit before tax are, so that is why I'm saying other than revenue. You see revenue, cost of sales, other than revenue, cost of sales, operating expenses, and the operating expenses, and operating expenses. Remember that operating expenses, this is all about the admin expenses and the distribution. The admin and distribution, admin and distribution. The admin and distribution, other than the four, other than this, other than the four. Cost, revenue, cost of sales, admin, expenses, and distribution, other than the four. Another item which would be above the profit before tax. An item which is above the profit before tax, we have to adjust here. So looking at this question of ours, which are items above the profit before tax, other than the four, we have the finance cost and we have other operating incomes. We have the finance cost. So the finance cost is all about which figure? 705. It was deducted, we add back. And we have other operating incomes. Other operating incomes. The other operating incomes. So the other operating incomes, they are talking about government grants of 750. It was added here, we subtract. It was added, we subtract. It was added, we subtract. So up to that point, I will be able to get what? Cash flow before working capital changes, before changes in working capital. So the cash flow before changes in working capital. Before changes in working capital. So up to this point, I will get the cash flow before changes in working capital. Before changes in working capital. Cash flow before changes in working capital. Remember, this is in thousands. Shillings in thousands. So the cash flow before changes in working capital. Before the changes in working capital. So maybe if there's any question, you can let me know. Asha, I can see you are following. You are talking about what is accrual expenses. The expenses which are not yet paid. So those are the accruals. Those are the accruals. The expenses not yet paid. The expenses not yet paid. That is what we call accrual. So those are the accrual expenses. So I'm heading to the second part of this question. So I will be adding to the second part of this question. So up to this point, which total do you have? So if you take 8190, we add 5490, we add 540, minus 345, plus 705, minus 750. So we have a total of 13,380. Not 13,380, 13,830. 13,830. Then we talk about changes in working capital. So cash flow before changes in working capital. So changes in working capital. So the changes in working capital. So for the changes in working capital, changes in working capital. So the changes in working capital. So remember that we talk about current assets and current liabilities. We talk about current assets and current liabilities. So under the current assets, I will be looking at inventory, receivables, and under current liabilities, I will be talking about payables. So the increase or decrease. So like now for the inventory, I can see there's an increase in inventory because we compare from the 2021 to 2022. So the increase in inventory. So the increase in inventory is all about 13,300 minus what? 13,300 minus 11, 445. So for the receivable, again, I can see there's an increase in receivable, So we have an increase in receivable. So the increase in receivable is 9230, 9230 minus 70, 80. Then the third one is all about, I go to the liabilities. Again, this increase in payables, So the increase in payables, that is from 7770 to 10,200. So 10,200 minus 7,770. So 770. So we get these figures. So 13,300 minus 11, 445. So this is 1855. Now remember that from this point of working capital going down, I will be interpreting based on cash inflows or outflows. Like now, if there's an increase in stock, what happens to your cash? There's a cash outflow because you bought stock, you paid money. So that's why we have an increase in stock. Receivables increased, so your debtors have increased. You gave them money. So what's the figure there? So if we do this, so this is 2150. So again, an increase because your debtors have increased. So again, your payables are increasing, liabilities are increasing, meaning that payables are the people who sells to you, the suppliers. They sell to you on credit. So if the payables are increasing, meaning that you are purchasing without doing what? Without paying. So this one, there's no cash out. There's no cash out. So in short, under the working capital, what you need to know is that if it's assets, when you look at asset, increase, you minus, decrease, you do what? You add. So this is assets. So if you are dealing with liabilities, it's all about vice versa. So you add, you minus. That is the case. And you know that you are supposed to deal with inventory, receivable, payables. And on some scenarios and assets, you will find that there's prepayments. So also you check increase or decrease. This is the rationale behind adding or subtracting. But here now, the meaning itself is in terms of cash in and cash out. Like now I've said, for increase in inventory, you have purchased the stock. So that is why there's money out. There's money out. Debtors have increased, meaning that you have given them money. So money out. Payables are increasing. What you are purchasing from your suppliers is increasing. Remember that suppliers, the payables, when the payable account increases, it means that you are purchasing on credit. There's no money out. There's no money out. You are purchasing goods without paying. So you will pay later. So when now there will be a decrease, that is when you have paid. We subtract. So up to this point, we have cash generated from operations. So the cash generated from operations. Cash generated from operations. So the cash generated from operations. Cash generated from operations. Cash generated from operations. So for the cash generated from operations, so we have 13, 8 what? 830 minus 1855 minus 2150 plus 2430. So I'm getting 12, 255. So then we raise tax paid, we raise the tax paid. So for the tax paid, we have to do our working. We have to do our working, or which even not our working, you can even do direct, but for more understanding, we can do our working. So these are working I will do here, a small working. So for the tax, you have to consider deferred tax. So remember that if it's a working, anyway, for us to be a bit neat, we can do it on this other side here. Remember that the question is all about intermediate level FR, December 2022. So this is important. Question 5. I don't have to clear this, so that you know. So for the working for tax, so I've said we consider deferred tax and what? Current tax. Deferred tax and the current tax. The deferred tax and current tax. So on this case, you start with the balance brought down. So balance brought down, you combine deferred tax, current tax. So deferred tax is under non-current liabilities. It's under non-current liabilities. So for 2021, remember that is the balance brought down, then 2022 balance carried down. So deferred tax there is 810 plus what? The current tax. The current tax is 2775. So if I add the two, so 810 plus 2775, you have 3585. Then you have to add what they were paying during the year, the income tax for the year from the P&L, profit or loss statement, income tax from the income statement. So they were supposed to pay 2655. So the total tax they are supposed to pay, if I add 2655 to 3585, the total is 6240. So you skip one line here, then you say balance carry down. You skip the line, you say balance carry down. So again, you combine deferred tax, 2022. Deferred tax is what? 2022. The deferred tax is 1920. Current tax is all about 2685. So 2685. You add the two. 1920 plus 2685. So this is 4605. So you can see at the end it's less. So it has reduced, meaning that it reduced from 62. They were supposed to pay 6240 total tax, but at the end they are supposed to pay, at the end of the year they are supposed to pay 4605. So that meaning that why it reduced? So they paid how much? So 6240 minus answer. So that is 1635. So this one you deduct so that you get cash flow from where? Cash flow from operating activities. So cash flow from operating activities. So the cash flow from operating activities. So the cash flow from operating activities. So if we raise that 1635 from 12,255 minus answer, I will be able to get here 10 what? 620. 10 620. 10 620. So this is A. This is the first part of the question, the operating activities. So we move to the second part, investing activities. So before I move to that part, I would like to check who is following, who has questions in the chat platform. Any questions so far? Any questions? So let me check. So Asha Mokhtar, I think I answered your question. I can see you are following. Asha Mokhtar. So is there any question? Any question? Any question? This question was very easy. That is what you are realizing for the students who did this sitting. The CPA students, this question was very easy. That is what you need to know. So I can see there is no question. So we continue to the second part of this question. So we do the second part of this question. So it's a continuation. It's a continuation. So we do the investing part. So the investing activities. So we do the investing activities. So the investing activities, I will be looking at what they received from the disposal of assets, or what they paid from the acquisition of the long-term assets. What they received, or what they did what they received, or what they paid. So what they received on disposal of assets, what they paid on acquisition of assets. What they paid on acquisition of assets. So cash received. There is this is what they received, which is more direct. There is this what they received from additional information number 2. Because they did what? They disposed a motor vehicle at the cost of 20,630. It was having a cost, not at a cost. It was having a cost of 2,630,000. The accumulated depreciation is 1,600,000. That is 165. Cash proceeds is 1810. So that is the first thing they received. So cash received on the disposal of a motor vehicle. So they disposed their motor vehicle at 1810. Remember, this is shillings in thousands. The next, we need to check maybe any other thing they received. So in my question, I can see there's something they call government grants. There's something they are calling government grants. But this is all about money received for certain projects, and you don't have to return it. It's a grant, A grant is not a loan. A grant is something you are given maybe for a specific purpose by the government, and you are not supposed to do it, to do a return. So there's this government grant. So we need to combine. So it's under liability. They are treating it as a liability. So there's that one under non-current liability. So balance brought down under government grant. So these are working I'm doing. I will be able to create for me to record what they received under the grant. So there's that one under non-current liability and another one under current. So the one under non-current liability is the balance brought down, not carried down, brought down. The one under the non-current liabilities, the government grants is all about, we have under non-current liabilities, we have 2,400. Then under current, we have the balance brought down as per 2021. We have, this one is government grant 600. Then checking the income statement, there is that other operating incomes under the government grants, other operating incomes. So the one which had already been received, other incomes, other. They are saying that other words, other. There is that one under the income statement, other operating incomes. Other operating incomes. This one is the one which had already been received. So other operating incomes, which will reduce the liability we have there. Other operating incomes, government grant. So there was that 750. So this one is supposed to be deducted. So you take 2,400 plus this one, that is 3,000. This is 3,750. Then you skip one line here. You talk about balance carried down. The balance carried down, non-current liabilities and current liabilities. So under these, we have non-current liabilities is all about that one. 50, and we have 810. So the total being 3960. So meaning that what they received, because it increased from 3750 to 3960. What did they receive? So they received how much? They received how much? So remember that we have done a mistake here. This one is supposed to be a deduction. This one is supposed to be a deduction because 3000 minus 750. So this is 2250. So then it increased to 3960. What they received here is 1710. So the 1710 is what they received. So government grant received. So the government grant received. So here we have a government grant received. So 1710. So 1710. The government grants received. So what did they pay? Anything they paid? What did they pay? What did they pay? So for us to get what they paid, cash paid, we go to the property, plant and equipment. We do our working on property, plant and equipment. So we start with balance brought down. So PPE. So I'm looking for what they paid if they acquired another extra asset. If they acquired another extra asset. So the balance brought down for the property, plant and equipment, it's all about, from the statement of financial position, we have 27,450. 27,450. So other than the 27,450, remember there was a new plant. So after balance brought down in the statement of financial position, now we go to the additional information and check anything else affecting a fixed asset. Remember, this is a long-term fixed asset. Fixed assets. These are about fixed assets, the long term, which have been aggregated. So now, after starting with the statement of a financial position figure, so this is from the statement of financial position. Now, I check in the additional information if there's anything affecting this. So number one, there was that plant which was acquired. So new plant acquired. So we add new plant, which was acquired, and they paid through a loan. Then additional information number two, there was a motor vehicle which was disposed. Motor vehicle disposed. So that one we raise. Motor vehicle disposed. So remember that this figure I have started with, the 27,450 is a net book value. Meaning that all the other items I will be recording, they have to be on a net book value. Like now this motor vehicle, I will not record the cost, but the net book value. And the net book value is the cost minus accumulated depreciation. The cost minus accumulated depreciation. So the cost of the motor vehicle was at what value? The cost of the motor vehicle is 2630 minus the accumulated depreciation, which was 16. That is 1165. So 2630 minus 1165. So this is 1465. 1465. This one we raise. Then another thing which can affect this property, plant and equipment is all about depreciation. We raise depreciation. Depreciation was 5490. Note 4 is all about intangible. Intangibles cannot affect this. Note 5 is all about bonus. Bonus cannot affect PPE. So another thing which can affect PPE is all about, if I go to the income statement, I can be able to see there's a gain on property. The revaluation, gain property revaluation. There was a revaluation of property, and this one was given in the income statement. And at the same time, the figure is given under the equity. under the equity part of the statement of financial position as at 2022. So that revaluation reserve. So there's a revaluation gain. Remember that this one we add, depreciation we deduct, revaluation we add because it's a gain, revaluation gain. Revaluation gain. So the revaluation is all about of the property. They were very specific of the property. Properties and it's classified under property, plant and equipment. So we have 25, 50. So up to this point, 27,450 plus 1,800 minus 1,465, 90 plus 25. So up to that point, we have 24,845. 24,845. So the balance carry down for the property, you skip one line here, then you record the balance carry down from the statement of financial position is all about 36,300. So why did the value reduce? Because they did a purchase. They did a purchase, or we say acquisition, or we say acquisition. So they did a purchase. So there's money they paid to acquire another property. So they paid how much? They paid 11,455. 455. So cash paid to acquire or to purchase, to acquire an asset. Cash paid to acquire an asset. So that is 11,455. 11,455. I think up to that point, there's no other question I've seen in the comment so far. There's no question I've seen in the comment which was acquired. Maybe they paid some money. As I check your comment, maybe if there's no any other question. And remember that my advice to you is all about other than these live sessions I'm doing now. Student. There is a program I have where I do online classes through the Zoom platform. Here we cover, if it's group accounting, we introduce a topic theoretically, what you are supposed to know, like a normal class. After we have introduced that topic, now we go to past paper questions. We do around 5 questions in a topic. So on that scenario, you will be okay to sit an exam. You will be okay to sit in an exam. So what I can advise, because that is what can benefit you more. What I would like to advise is all about join my class. That is why you can benefit more. Yes, even here you are benefiting, but if you join my class, you will benefit 100%. Use this number. If you could like to contact me after this class. So this is my number. You can use WhatsApp if you are not in Kenya. You can call me if you are around. So this is call. Call this for you to join. So this is 07 28 765 46. You know the Kenyan code is so yeah, we have to put 254. So there's 7 there. So 28 760 546. So 28 so 765 46. All right, let's do another thing. We check if there's anything else they acquired and they paid money. But this one we have done our working 11,455. So there's an intangible asset I can see there. There's an intangible asset. So under intangible assets, again, I need to check if they acquired another intangible asset or they did what? They disposed. So the balance brought down as per 2021. The balance brought down there under the intangible assets. The balance brought down is given under the intangible assets as 6150. 6150. Then intangible assets, remember that they are done what? They are amortized. They are amortized. So in this scenario, there was amortization of intangible assets. So we raise amortization because that is what they said there was amortization in the additional information. So there is 540. That is in additional information. And number 4, intangible assets amortized during the year. Intangible assets amortized during the year. So the intangible assets amortized during the year. So our laptop was almost going off. That is why I've just done very fast to avoid that. So we continue. So the balance brought down is what about 6150. Then there is an amortization in the additional information, meaning that the figure was reducing to what? So I use my calculator. So 6150 minus what? 540. So this is 5610. So then you skip one line, you say balance carry down. Balance carry down. So the balance carry down for what? For the intangible asset as at 2022. So the intangible asset as at 2022 is 6750. So the reduction, it means that they did what? From this to this, from 5,610 to, so it is an increase, not a reduction. There's an increase here, meaning that they did a purchase. They did another purchase of intangible assets. That is why we have an increase there. So 5610 minus 6750. So this is 1140. So cash paid on purchase, on purchase of intangible assets. On purchase of intangible assets. On the purchase of the intangible assets. So remember that for the cash paid, we deduct. For the cash received, what they received, we add. What we received, we add. So we can get the total of the 4 items because there's nothing remaining under that, other than what we have done. Other than what we have done. So I can see members you are following. That is good. I appreciate for your time. I can see around 11 students are following. So make sure that you like this live session. So once you give more likes, that is how it can be given more recommendations for more people to watch. So you can click the button and you like, and at the same time you can share to your friends who would like to watch these cash flow statements, how you do the cash flow statements. So this is under the published. Remember that nowadays cash flow statements is among, not even nowadays, even from the previous time, cash flow statement is among the published statements. And you have realized for the guys doing CPA, the intermediate level, financial reporting and analysis, this topic has been tested in 2 consecutive sittings, August 2022, December 2022. You never know what will happen in April 2023. So we are done with investing, so we need to get the total and record on the far end there. So we have the cash flow from investing activities, cash flow from investing activities. So then the last part will be financing activities. The last part will be financing. So let's get the total. Let's get this total. 1810 plus 1710 minus 11,455 minus 1140. So this is a cash outflow of 90,75. And so then now for the financing, you would mostly focus on the equity part and the liabilities, because the organization can be financed through equity or debt. Organization can be financed through equity or debt. So I would like to do the workings on this other side. But remember that our answer from operating activities is this, because this one will be used somewhere. That is why I don't have to clear everything. But if you go, if you check my video, then you just move it backwards, you will be able to find how I arrived at this. For the guys who have joined now, you will be able to watch later and know how I arrived at 10,620 for the operating activities. So we continue with financing. So I have said we check the part of equity and liabilities. So under equity, there's ordinary share capital and share premium. So under that, we need to check if there is an issue of shares or there is a redemption of shares. So we have ordinary share capital and the share premium. So the balance brought down. Remember, these are working. So the balance brought down. For the ordinary share capital. Ordinary share capital is 6,000. 6,000. Then the other one is 75. But this one we combine. Then in the additional information number 5, they said that during the year ended 30th April 2022, Maram Limited made a bonus issue of ordinary shares of 1 new share for every 10 shares held, utilizing what? Utilizing the share premium account. Utilizing the share premium account. So what are we supposed to do? So on this scenario, on this case, they are saying that they did what? They did a bonus issue. Remember that a bonus is all about shares issued to the existing shareholders for free, based on the shares they hold in an entity. So right now, this bonus, because it's given for free, there's no equal return the company will be getting based on the bonus which is made. So once a bonus is made, there's no equivalent resources which comes to the company. There's no equivalent resources because we are just giving shares without receiving anything at free consideration. That is why they said they utilized the share premium to do what? To issue that bonus. So the bonus is on a ratio of 1 to 10. So we have times what? Times the shares, because this is 6,000. So 6,000 divided by per share. If you go to the statement of financial position, you are told is 10. So the number of shares is 600. But here we have to record a value. We have to record in shillings because this is in shillings, thousands. Shillings in thousands. So we have to multiply with shillings 10. So this one gives us what? 600. So you add here, you minus here, because we utilized what? We utilized the share premium. We utilized the share premium to issue this. So this is 6,600. Then if you take 7,500 minus 600, so this one will be 6,900. So that one will be 6,900. So then the balance carried down will be so the ordinary share capital and so this one was 75, so this one was 6,000. So the balance brought down here is not 75. For share premium, 2021 is 1050. This is 1050. Then here is where we have the balance carried down as at 2022. It's all about 75. Then the share premium is 1350. I think you can see that. Remember, this is according to the balance brought down. This is 2021. And this is 2022. This is 2022. That is 2022. Yeah. So on that scenario, on that case, so we can see there is an increase right now here from 16,600 to what? 500. So 7,500 minus, so this is 6,600. 6,600. So this is 900. So there's an increase there. Then the other one was 1050 minus 600. So this is 450. So 1350 minus answer. Again, this is 900. So that is what they received, the cash received on the issue of shares. They only received this because there's an increase here from this to this, from this to this. So that is what they received. Cash received on issue of shares. So that is 900 plus 900. So this is 1,800. So that is 1,800. That is the 1,800. Aye. So other than that, if we check under the equity, because we have done ordinary share capital and share premium, there's a revaluation surplus. That one was rated to the property because we were told that in the statement of profit and loss. Remember that when I was adjusting my property, plant and equipment, I added the 2250. That is 2550, sorry. So that one already is catered for. It was for the property. It affected our property, plant and equipment. So we go to the retained earnings and check if there's dividends paid. So I do the workings for the retained earnings to check for the dividends paid. Dividends paid to the shareholders. So the dividends paid to the shareholders. So the dividends paid to the shareholders. So you use the retained earnings. Retained earnings. So my balance brought down for the retained earnings. My balance brought down as per 2021 is 25,980. So you add the profit for the year from the income statement. Add profit for the year. Add profit for the year. So the profit after tax is 5535. 535. So the 5535. So if I take 25,980 plus 5535. So this is 31,515. So the balance carried down here under the retained earnings from the statement of financial position. It's all about 28,065. 28,065. So remember that there's this reduction of profit. Why? Because they paid dividends. Dividends paid of what? Dividends paid of 3450. So the profit reduced from this 31 to 28. So dividends paid. They paid dividends to the shareholders. Dividends paid to the shareholders. Dividends paid. So the retained earnings. Dividends paid to the shareholders. So that is correct. So dividends paid to shareholders. So that is 3450. 3450. So we are done up to the retained earnings. So I said we check the equity and the liabilities. So we go to the liabilities. So remember that there is this 10% loan note which was issued when they were purchasing the plant according to note 1. Remember that the plant was at 1.8. They purchased this from a finance company. Of which they paid through issue of a 10% loan note dated 2025. So, but the value of the loan exceeded. The value of the loan was more than the liability. Was more than the liability. So meaning that we need to analyze that 10% loan. so that we check what we remained with, because we issued more. So issue of loan note, issue of loan note, issue of loan note. So the balance brought down. If you go to the non-current liabilities, you can see the balance brought down is 5250, but at the end is recorded as 8250, meaning that the difference is 3000. The difference is 3000. That is what we could have received back from the finance company. The 3000 is what we could have received back. But now remember that that is what was used to do what? To pay for the plant which we acquired. So the excess is what we remained with, because that is what we received. The balance is what we received from the finance company after catering for the amount we paid. We paid on the acquisition of the plant. Additional information number 1, the 18 is there. So 3000 minus 18, that is 12, 12, 12, 12. So that is what we remained with. That is what we received in short from the finance company. That is what they said in note 1. There are sentence. The value by which the loan exceeded the liability for the plant was received from the finance company in cash. This was received in cash. Was received in cash. After that, we go to the what? Because for the government grant, I'm done with that. I'm done with the tax. I'm done with tax. What I will record here now, finally, is all about what we paid as interest. Interest paid. So interest paid from the income statement was the finance cost. The finance cost is 705. 705. 705. So up to this point, we have the cash flow from operating activities. Cash flow from from financing activities, not operating. Financing activities. From the financing activities. So 1800 minus 3450 plus 1200 minus 705. So this is 19. This is 19 or what? Have I recorded everything correct? So 18 minus 3450 plus 1200 minus 705. Yes, this is 1155. So after this, now you can be able to get the total of the three. But this one was A. This one, I remember it was from operating. This is B. And this is C. That is C. That is our C. Yes. That is our C. So the next thing you are supposed to get, where's my duster? The next thing you are supposed to get is all about the net cash flow. You are supposed to get the net cash flow. So net cash flow, you add A plus B plus C. A plus B plus C. So A from the operating, cash flow from operating, we got 10,620. Then the other, this one is 9075, we minus, it's a negative, and this one is 1155. So the net cash flow up to this time is all about, so 10,620 minus 9075 minus 1155 is all about 390. So you can put on the other end there, 390. So the 390. So then now you come here and add cash and cash equivalent. Cash and cash equivalent. Balance brought down. So that you get what? The cash and cash equivalent. Cash and cash equivalent. Balance carried down. So the cash and cash equivalent according to 2021, then cash and cash equivalent at the end as of 2022. So according to 2021, if you go to your current assets, you can see you are given a cash and cash equivalent of 510. Then as of 2022, you are given 900. So if I put this one as my balance brought down here, I am supposed to get 900. I'm supposed to get 900. Am I not getting 900? Am I not getting 900? I'm getting 900. So I have confirmed that the cash we have as at the start of the year, then after the transactions during the year, it's reconciling with the cash at the end of the year. So other than being given direct cash and cash equivalent, remember that you can be given the components of cash and the cash equivalent which you sum. Which are these components which are supposed to be summed? Cash in hand, cash at bank, bank overdraft, and short-term investments. An example of a short-term investment is a financial asset at fair value. You sum them, of which overdraft you have to deduct because it's a liability. So that is how you were supposed to do this question. And during marking, they were giving 2 marks for each correct entry, for each correct entry. But remember the marks were just 20 marks, so which means that they needed how many? 10 correct entries. They needed only 10 correct entries. Only 10 out of what we have done. From the first entry to the end, they just needed only 10 correct. They multiply by 2. You get what? You are 20 marks. That is how we marked that, this question. That is how we marked this question. What I could like to say, guys, because I can see the students following here. These questions are not difficult. Like now, this one is 20 marks you have. You are supposed to do other 2. You find yourself in advanced level. You are supposed to do only extra 2 questions. Once you do this correct 20, you need to do, maybe there was another question there I can see, it was very simple. Ratios. They were asking about ratios, shareholders ratios, internal management ratios, payable ratios. So you do 2, you get your marks. Then you do consolidation. It's another topic I have done many questions, even in the YouTube platform. So all of these things I do, all of these topics I do the same way I'm doing here, but this one is more of a shortened because I have not interpreted the topic. That is by introducing the topic itself, because I always introduce the topic, give out the notes, we do the format, then now we do the questions. So welcome to my Zoom classes. Welcome to my Zoom classes. FR is on Wednesday and Thursday, 8 p.m. to 10 p.m. Like now, this Wednesday, I will be doing which topic? I will be doing group accounting. So after group, we do financial analysis. We do ratios and common size method, how it's used to analyze statements. After that, we do branch accounting, the local independent and the dependent branches. Then after that, we do conversion of a partnership to a company. Once you understand these topics well, there's no way you can fail in any exam. And once you know how you are supposed to run an exam, never waste your time doing workings fast in any question you are doing. Do the statement which is required as you do the question. Like now here, you realized that I was not doing the workings fast. I was doing the workings as I do the statement which the examiner will be marking. So I know some guys will tell you that concentrate on workings first, then move to statements which is required. Workings never earn you any mark. If you could like to know this more, I always share the marking schemes. But this one is done in my live classes, the Zoom one, in the groups, in the WhatsApp group, which I have. I always share the way the exam was marked in every sitting. You will be able to realize how you can be able to pass in a very short way without wasting your time and without wasting your resources. Have a nice time. Good night. Thank you for your time for today. And let's meet in the Zoom classes, because that is where we do more work. Or again here on scenarios whereby I would like to do there are sitting questions, because most of there are sitting questions will be tackled on live sessions, which will be done on Sundays from 7 p.m. The 5 questions, I will be able to do it on this live session under YouTube. Thank you, and welcome to my live session other than YouTube, that is in Zoom. I can repeat again my number, whoever would like to contact me. This is my contact here, plus 254 7, that is 28 760 546. Either use WhatsApp, you can call me so that we can be able to do what? We can be able to converse more. Thank you, Eric. Thank you. And that is the end of the stream today.